Good morning, and welcome to another edition of Roadhouse Last Call. Roadhouse Last Call, the morning show, talks about the morning, the events that impact our lives, both inside the market and outside the market. Some of these things piss people off, some of them make them happy. The ones that are happy, usually at some point in time, end up being pissed off. Good morning, Bender. Usually, it's it's an ebb and flow. It's a seesaw, if you will. There's something for everybody always. Al- Always. Anyways, what was your evening, sir? Very nice. I made pizza. I threw the dough in the air. I threw it in the air and I caught it and I spun it and I threw it again and I caught it and I spun it. You always have to stay sharp. Always. You never know. You never know. You never know. Also watched some cool little. Ironically, Netflix has this little docu series on pizza, Chef's Table, the Pizza Edition. It's like 6 episodes, really good. Just really amazing how passionate. I think it's so cool how people can become passionate about some of the most obscure things like dough, flour, and yeast, and what temperature, and then how to taste the dough to get it to where you want it to be. It's like there's so many different nuances to life and different skill sets that people kind of pick up and have a passion for. And what's interesting is like every single one of these individuals in this little docu series, they were all faced with some type of challenge as they pursued their passion, whether nobody wanted to eat their pizza or whether there was a pizza shop down the street that was established, and so they were struggling and trying, or family pressures or whatever it may be. But the one thing that all of these individuals had in common, they shut all that out, all of these periphery things that were kind of impacting them on the negative, and went all in on their passion, all in, shutting out family, shutting out friends, shutting out anything and everything so they can stay 100% locked in on their passion. I thought that was really interesting. Um, I think there's something to be. Yeah, I think if you're going to be good at something, you have to face the adversity. The adversity ultimately makes you stronger, and once you persevere, that strength, that foundation that's been built is pretty much impenetrable once you get to that point. Um, but at the same time, these guys are always looking to evolve their practice, always looking to add and refine and tweak. Really, it's like I don't know. Really good little doc. Enjoyed it. A little series. Good times. Um, all right. So we got a big day, man. We got a big day. We got a big day. Crude oil inventories, I think, are out also. Um, 30 minutes after open. It's interesting. We did get a little bit of mortgage data coming in, and mortgage applications spiked, refi spiked. Um, and it's only one data point, but it's really interesting as far as that, and rents keep on rising. Um, very odd place that we're in as far as the environment. It's like I'm sure the Fed would have preferred that the numbers came in horrible and come in horrible, but that's not necessarily what's happening. People still, kind of want a place to live. Fuck, who are they? Go figure. Chasing the American dream, trying to get you know, what they were promised, their birthright, that kind of stuff. Um, Look, very large day today, and before Bender gets into his levels, I want to reel off a couple of things that are going to be really important. mornings leading up to these events, it's about the breadcrumbs. It's about looking for the breadcrumbs. That's what today is going into FOMC. So we're looking for breadcrumbs. We're looking for TNA. We're looking for TECL. We're looking for activity on SQQQ, SOSX, SOXL. Looking for activity into ARK-K. How are they positioning coming into that? Are they puts coming on the bid, or are they doubling and tripling down on death and destruction? It's like that is one of the it's such a powerful tool going into FOMC and binary events like that. Is how is the money being positioned? What we do know as of right now, the vast majority of money is positioned for the downside. There is no disputing that in any capacity. We do know based on after the market closed yesterday, I went through a little game, if you will, with the nose whistle and some other members as far as where we are with the narrative versus the chart versus the flow. And we walked all the way through those different things by pulling up the SPY daily. We can see how they can easily make a push down to 360 on SPY and have it make sense on the chart. You can see it. We can see how the flow is positioned with a lot of activity down in that 360 level. We can see it. It's there. The question ultimately becomes, based on that conversation last night and walking into today, what is and is not Bender priced in? So when we went back and we looked at the daily chart, when we were sitting down around these levels before, it was, inflation had not yet peaked. This was the conversation going back to July, I believe. All indications are indeed that inflation has peaked, that the worst of the worst is in. And so we rallied on the back of peak inflation, and we rallied off the backs of, hey, sometime in 2023, we're going to be looking at rate cuts in QE. That's what the narrative was. So we ran all the way back up to 430. And then the wheels fell off. And so here we are down here with the overall sentiment of the Fed having every piece of artillery on the planet pointed at everybody's head. That's where we sit now. With inflation being big question, data being big question, and what the Fed wants to do and how steadfast they're going to be in wanting to raise rates and what the fallout of that will be. It's like, how far are you going to go? That's the question. So the messaging coming out of the Fed is important. Very, very important. The messaging is more important than the number. I don't think anybody expects it to come in above or below that 75 basis point. 75 basis point, I'll go ahead and scream it to the top of my lungs, is priced in. What is not priced in if Powell says, hey, we're going to line up for another big whop. Or he turns around and says, hey, we're going to be data dependent. If he says data dependent, and we're going to see, we have to be very measured and calculated in what we're doing as to not disrupt, blah, blah, blah. And the market has a chance to absolutely bang to the upside. Because right now, the current position is, at least what the market wants to take is, this motherfucker is gonna jack rates just cause. So forever, just cause. Data be damned. Because you can't say you're data dependent and then say, hey, we're moving towards, a Fed rate of 3%, 4%, 6%. That's not being data dependent. That's just saying we're doing it. So the word data, exactly, regardless of what happens. So right now, the shift and the sentiment is on the side to where they're going to murder everybody, including the goldfish, after they're done raping the shit out of it. That's the sentiment. That's where we're at this level. Matches with the chart, matches with the flow, matches with the narrative. That's where we are. The only thing that changes that, and we have to remember again, we have not had real messaging, official messaging from them really since Jackson Hole, to where, you can see it on the chart, where we all gonna die. Then we get that CPI print, we all gonna die. We all gonna die. It's all in the mix. All there. What we do today, we watch for the breadcrumbs. Watch for the breadcrumbs. It's going to tell us. If they come in and they're selling calls on TNA, and TECL and SMH, they're loading into puts. We're seeing 7-digit, call selling on Apple and Tesla and Amazon and Microsoft and big names like that. We're going to get hit with the stick, and it's going to hurt. And that area down there around 360, pray to God that it holds. Because the narrative and the feel is that we are going to go down, and we are going to go down hard and fast. That's the feel. Doesn't have to be, but that's kind of where we are. We have to understand that from an overall standpoint is A&D can come in and say, this shit is priced in, and we rally back around 400, maybe 410, 420, somewhere in there. It's entirely possible. We've seen pumps off of less. But what we don't necessarily know is how the market is going to react to what Powell is going to say as far as forward guidance, if you will. The best thing that the market can say, or Powell can say, is we are data dependent. We are going to be very measured in what we do as to not disrupt the economy. Anything short of that, and we're in the shitter. Look, that's it. I spent a lot of time last night, Ben. It was raining here last night and yesterday. I spent a lot of time walking around in the rain, mumbling to myself. Did a lot of mumbling right last night. And that's the only thing where I kept on coming back, looking at charts, coming back, looking at charts, looking at different things, just over and over again, and recycling and going out and walking in the rain. And it's like this is the environment that we are in. And right, wrong, or whatever, we have to be ready to take care of our capital, which ultimately, at the end of the day, that's really our only responsibility, is taking care of it. Some days we do better jobs than others, but we have to always keep that in mind. So with that being said, after me kind of blathering for a bit, Bender, what say you on these charts and levels? Do you have any, let's take the Fed off the table coming into the day. Which way would you be leaning? Mm-hmm. 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 All right. All right. Very nice. Stockington, what you got for us, buddy?
Hello, good morning. Um, I wanted to start with a little poll in the room. If we hopefully have some people. I was kind of doing a little experiment myself yesterday, but I guess really comes down to whether or not this has value for you guys. So yesterday, I'll put the chart in here. I was testing out sharing some patterns I was seeing on charts with nothing on them. And so here's an example. I replied to my own message where I posted a chart on SPY yesterday morning with all my indicators and lines and stuff. And if you guys, I want to help you guys out in the room here with these charts. So this one did play out. SPY moved up. It was a little falling wedge there that I posted, but I was posting some charts yesterday with just the little patterns on them. So I don't know if you guys are using these at all, or if they help or not. So I don't know if you guys like this chart with nothing on it, or if you want the other one. Here's the one that had all my indicators. You guys let me know if you'd rather have, you know, this kind of thing with all my indicators or just blank. Um, so whatever, react green if you like it, red if you don't, whatever. So that was just my idea. I don't know, whatever helps you guys. Okay, cool. So yeah, I feel like just posting. I was messing with posting less busy charts just to show what the pattern is. Cool. So I'll keep that going. Okay, so looking at the list. Okay, decoder list indicators. All right. Just a slight tweak on Netflix. Just to give it crossed that dark pool that I was using. And that was the line at 243.65, so it's above that. So to give it some time to shake out in the open, I'll be looking at 244.65 was a line I had on there. And then if Netflix was going to go down for potential shorts, there's this dark pool that's been showing its value pre-market 242.85. So that's what I'll be watching on Netflix. NVIDIA, just a slight adjustment. We'll just use yesterday's upper orb as the call trigger, 133.2. And then this dark pool below 131.65 has been showing its value all week. So I'll be using that to look at taking NVIDIA short. And then Tesla, be looking at 309.85, potentially take Tesla long, versus 307.6 to potentially take Tesla short. And then probably a good line to have on the chart is 305.55 was yesterday's lower orb. But that's all I got.
All right, there, Stockton. I'm going to ask you the same question, buddy. You just gave us a bunch of levels and lines. Do you have a lean or a tilt in how you're looking at this?
I mean, oh, this is a good reminder too. SPY, dark pool last night, 384.04, $2 billion. I mean, it seems to be things pointing up, but honestly, these kind of days, I don't even really like touching anything. I just want to kind of see
So
things.
the question is not what you're going to do. That's not the question.
Yeah, yeah.
Same question that I posed to Bender was take Fed off the table. You just went through levels on a chart. You just went through levels, triggers for calls and puts as far as different tickers. You just went
Mhm.
through that. Take Fed off the table. Which way do you lean?
I say up.
Okay, fair enough. All right, so this is what we're looking at. We also have to acknowledge that we have the dollar sitting here hovering around highs once again. Very, very dangerous as always over here on the dollar. We'll see how it reacts. Ultimately, when you have the dollar at the highs, you have gold at lows, you have equities at lows. Something has to give there. So watching the activity in and around the dollar, I think is going to be very important. And then post-Fed, I know we have been very talkative about this. Probably every single binary event that the Fed has had over the last couple of years. But be careful on the first move. Be careful on the second move. And there has been a tendency, has not happened every time, but the following trading session tends to reverse whatever happened on that given day. We can't forget that we have seen massive spikes that sell off and massive dumps that get bought back within the next 12 to 24 hours of that. Again, today is breadcrumbs. My plan is I'm going to be fairly quiet. I'm going to be looking at breadcrumbs throughout the morning, throughout the day. I will not put on a trade unless it's the sell all button going into FOMC. I will not be putting on a trade in any capacity. The only thing that I may do is hit sell all. That's it, depending on the breadcrumbs that I see coming into it. Within about 45 minutes before FOMC, I'll come on voice. I'll give probably a 10-15 minute breakdown on exactly what breadcrumbs I have gathered. And then we can hopefully work through the chart with Bender a little bit to try to really be focused in on what to look for in the minutes going up to and the minutes after both the rate announcement and Powell's speech. I think it's important to acknowledge the chart going into binary moments like this, considering there's always this question, who wags the dog? The chart or the money? I don't know. We'll see. Today will be a good test. Anyways, guys, that's all I have. Bender, you have anything else? Absolutely. 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 100%. So let's kind of make that our plan a little bit. Let's contribute to with one another and work as a team as well as we possibly can, which I know we do a great job of. So let's keep an eye on the prize. Let's know that we have game time here in a few hours. It's a real fucking game. This is the Super Bowl, if you will. So let's come out on top. Nobody likes to be on bottom. See you guys in about 15 minutes. Thanks again.